Hi there, I'm Jamie Trull. I'm a CPA, I am a financial literacy coach, and a profit strategist. And I've been bringing you tons of videos all about the stimulus, specifically for those of you who are small business owners, entrepreneurs. That is who I typically teach. So I'm glad to have you here. Make sure to check out some of my other videos and subscribe. So today we're going to be talking about a question I get all the time, which is all about the taxability of these different types of stimulus funds you might have received. So we're talking about the actual stimulus check, we're talking about unemployment, and we are talking about EIDL. This video, I'm not going to talk about PPP. I have a separate video walking through the taxability of PPP because that one gets a little bit complicated. So if you're interested in PPP, make sure that you check the link below, which will take you right to the video about the taxability of PPP. But of course, I really want to caveat before we get into any of this, this is not to be considered tax advice. Always make sure to be working with a tax advisor or a CPA directly. And it's exceedingly important this year. So I've been telling people, if you've never used an accountant before, you're gonna want one this year, specifically if you have a small business or you're an independent contractor or you're an entrepreneur. There are so many things going on this year that you're gonna need somebody to help you with this stuff. There's just way too many things that can be missed. So make sure that you have a trusted CPA that understands this stuff that can help you. Okay, so let's jump on in. I want to start first with just talking about the stimulus checks and the taxability of the stimulus checks. Are they taxable? That's a question I get all the time. So when we're talking about the stimulus checks, we're talking about that first round of stimulus checks that went out, $1,200 per adult, $500 per child. There may be a second round of stimulus checks that may be similar. It likely would be set up very similarly. So if that does happen in the future after this video is created, it's September 2nd right now, so we're still waiting on the passage of the next one. If that happens, the same rules would likely apply to that. So I have a little chart here you can see about the stimulus checks. So the stimulus check is not taxable, you guys. This has been a little bit confusing around how it's going to impact your taxes. It is actually a tax credit. It's a brand new tax credit that they're giving you early. So normally for tax credits, we have to wait to take them on our taxes and get that extra money at the end of the year, and it would offset any tax liability that we would have had otherwise, or potentially give you a refund, right? In this case, they said, okay, people need money now, so we're going to give them that tax credit early. So if you got the money, it won't have any effect on your taxes. You won't owe any additional kinds of taxes when you go to file your 2020 taxes. However, one thing important to note is if you, for some reason, did not get your stimulus, maybe you qualified, but it just never came, or maybe your income was too high last year, and so you didn't get the stimulus check. So again, they started phasing out around $75,000 or $150,000 single or married filing jointly, and they were totally phased out by $99,000 single, around $200,000 married filing jointly. So if you fell in there and you did not get the whole amount or you didn't get any at all, but then this year your income is below that, you will be eligible for that tax credit when you file your taxes at the end of this year, okay? So a lot of people were really worried, I didn't get my money, did I just miss out? No, if you end up being eligible this year, then yes, you will get that money, okay? So that's important. Importantly, if you are a business owner, a lot of people were wondering where to put this. This is not business income. This is personal income. You do not want to put this into your QuickBooks file or anything like that as business income because you might accidentally get kind of taxed twice on it if you do that, if you include it as business income when you file your business returns or when you file your Schedule C. So now we're going to chat about unemployment. So we're talking about unemployment, whether you got regular unemployment or you got unemployment through pandemic unemployment assistance, PUA. If you're a small business owner, contractor, that may have been how you got unemployment if you weren't normally eligible. And that any additional federal money you're getting. So that was the extra $600 through the end of July. Now some states have up and running the extra $300 or $400 based on the executive order that Trump signed. So all of that is taxable. Okay, so that's really important. Now, some of your states allowed you to actually say that you wanted to withhold that money. So it asked you, hey, do you want to withhold this? And just like a paycheck, they took those taxes out for you. Now, of course, as with anything, it's always an estimate. So at the end of the year, you'd still have to true up. Whether you paid in too much, then you get a refund. If you didn't pay in enough, you have to pay. But at least they took something out so that you aren't on the hook for the full amount. So some states were able to do that only with the state portion of unemployment and not with the extra federal money. Some states were able to withhold from the extra federal money too. So look at the amounts that you were getting and determine, are taxes already taken out of it? And if so, are they taken out of both your state amount and the extra federal amount? Or were they not? Maybe you either decided not to withhold or your state just wasn't withholding off of one or both of those. If that's the case, you're going to be on the hook for those taxes, okay? Now, here's the silver lining here, okay? You will not have to pay payroll taxes. You do have to pay income taxes, but not payroll taxes. Payroll taxes are the Social Security and Medicare portion. That one adds up to 7.65 employee side, 7.65 employer side. So those payroll taxes are a large part oftentimes of your tax bill. So it will reduce your tax bill. You're not going to have to pay as much in taxes as you did, say, when you had a paycheck, but you still have to pay income taxes. So you may want to work with a CPA here to make sure that you've set aside the right amount of money for income taxes. I know that most states usually withhold somewhere between 10, 15%, maybe even up to 20%. 20 is probably high end. But it really depends on your personal tax situation, how much you should withhold. I say minimum, you need to be putting aside 10% of that unemployment money to pay your taxes if those taxes are not already being taken out of your paycheck. Okay. Now let's go to the how to record. Again, if you're a business owner, I know a lot of business owners that had this unemployment check deposited to their business. I don't recommend that. I actually recommend you deposit personally. And if you need it in your business, do a capital contribution or something like that into your business. But the problem with putting it into your business to begin with is that it may accidentally get picked up as business income. Okay, so the next one I want to jump in and talk about is the EIDL, the Economic Injury Disaster Loan Grant. We're going to talk about the loan here in a minute, but now we're just going to talk about the grant, or the advance it was also called. This was the $1,000 per employee amount that you got that was automatically forgivable. Okay, you don't have to apply for forgiveness for this. It's automatically forgiven. But the question is it taxable? What are the tax consequences of the EIDL grant? So yes, the EIDL grant is likely to be taxable. At this point, Congress has not put out anything saying otherwise, and neither has the IRS. Could they change that? Yes. It's not impossible that this changes, so make sure, again, to be working with a CPA to make sure you're aware. But right now, I would plan for that to be taxable. Same thing with any other grants you may have received. So if you've received grants from any other grant program, maybe from your state, okay, if it's an amount that you don't have to pay back, it is presumed to be taxable unless stated somewhere that it isn't, okay? So I would expect that all of those will be taxable at your normal rate. So it will basically be included as business income to you, okay? So that's important to know when you're planning for your taxes, that part of that grant should be set aside. And that amount that you need to set aside to pay your taxes is really going to depend on your specific tax situation. So make sure, again, consult with an advisor to make sure you know what that is and how much you should put aside. But I would definitely put a decent chunk of it aside to make sure you have enough money to cover your taxes for it at the end of the day. Okay. Now, important to note, because this is a little different than PPP, and we're not going to get into PPP a lot here, but the expenses that you pay with that EIDL grant or any other grant are still deductible. Okay, so it is taxable income to your business, but the expenses that you pay with it are still deductible. Now, as far as recording it, I get this question a lot. How do I record this? This should be recorded to your business because it is a business grant, okay? And you probably want to go ahead and create a new account for this so that it's sitting separately. It's going to be like an other income account on your P&L, but I would actually specifically describe what it is and have other income, EIDL, or other income, X grant that you received so that you can see it really easily, and so that your CPA at the end of the year, or your EA, whoever's preparing your taxes, can actually see that and know exactly what it is and make sure that they treat it correctly for taxes. And that will also help if they do change the rules and it becomes non-taxable, then they'll be able to see that really, really clearly on your P&L, and it won't accidentally get taxed. Okay, and lastly, we're gonna talk about the EIDL loan, the Economic Injury Disaster Loan, the amount you do have to pay back, not the advance portion. So the loan, is it taxable? No. Why is it not taxable? Because no loan that you have to repay is taxable, right? So when the money comes in, it's not considered taxable income. But what that means is when that repayment money goes out, that's not a deductible expense either. The only portion that will be a deductible expense, and again, this is true for any loan, not just the EIDL, but the only portion that's going to be tax deductible is going to be the interest portion that you pay. So any principal amount you pay back, you are not going to get a deduction for, but it's also not going to be business income when you get it. But the interest, because that's in addition to the principal you got, that interest payment is interest expense. It is deductible for tax purposes. Okay. Now, importantly, when you go to record your EIDL loan, make sure that you don't record that as income accidentally on your P&L. That needs to go to your balance sheet. It is a liability that sits on your balance sheet. As you repay that liability, it will reduce the liability, okay? And your cash will go out the door to repay the debt. And any amount of interest will hit your P&L. So that's really how that kind of gets recorded, where you're going to have that liability amount that will reduce over time. And when you've paid off the liability, you should have $0 left on your balance sheet for it. So that's just the normal mechanics of how it works when you record any type of loan. But there are no tax implications to EIDL outside of the interest expense that you are going to get a deduction for at the end of the day. Now, if you're someone that received the EIDL loan, make sure that you've downloaded my tracker. It's going to be found at jamietrell.com/EIDL tracker. There you can actually do the interest calculation. It's going to tell you how much interest you are paying on your EIDL loan over time. It's going to do some calculations for how to repay the EIDL loan and the amount of interest that could save you if you repay it over time. And it's also going to give you a place to track all of those expenses that you pay with your EIDL loan, which you should be tracking in case you are ever audited by the SBA or anyone else. So make sure you've checked that out. Again, jamietrell.com/EIDL tracker. It's also linked below. So hopefully you guys found all of this helpful. If you did, make sure to come over and join Financial Literacy for Women Business Owners. It's my Facebook group. We do take men as well, and we are talking about all of these things. We're having conversations and helping one another and staying updated with what is going on out there. Also, make sure that you subscribe to this YouTube channel. Just press the button right now. It should be on the screen somewhere. Make sure to press that button and go check out some of my other videos. I have a playlist on PPP. I have a playlist on EIDL. I have a playlist on Q&As that I'm doing every single week to keep you guys updated with everything that is going on related to this stimulus funding. So if you want to make sure to stay up to date, make sure that you subscribe. I'll see you guys next time.